Welcome to episode 2 of Hot Markets. Today, we'll be taking a dive into whether or not Apple stock is worth owning while the company is valued at all-time highs. Looking at the charts, Apple is up 54.63% year to date and up 41.44% from this time last year to arrive at a market cap a bit north of $3 trillion. In the trailing 12 months, Apple has produced $385.095 billion in revenue and $166.288 billion in profit. The company currently trades at 32.84 times earnings, 47.7% higher than the price-to-earnings ratio of the S&P 500. This is all despite seemingly very little innovation over the last 5 years. So what makes the stock worth owning at all-time highs and what makes it not? The two main things that make Apple stock worth owning at all-time highs is 1, their historically strong balance sheet, and 2, their customer loyalty. Apple's insanely strong balance sheet begins with their share buybacks, which have been constant and repeated over the last several years. It can be seen that since 2020, Apple has bought back $499 billion worth of shares. This means Apple believes they'll receive a higher ROI investing in themselves than investing elsewhere, which is a general, very positive sign of strength coming from within the company. This has also led to rumors that Apple is attempting to go private, which to me doesn't make sense for a plethora of different reasons. Apple's historically strong balance sheet is also backed up by the last 11 years where they've consistently increased dividend payments. A company that consistently pays dividends is able to avoid volatile swings in the stock price because it helps create a strong investor base and minimal trading of the stock among large institutions who seek to gather those juicy dividend payments. As it relates to customer loyalty, nobody has it more than Apple. Let me share some stats with you. Apple has captured 30% of the worldwide iPhone market and 57% of the United States iPhone market. 96.4% of millennials who own iPhones say they intend to repurchase one, and 70% of iPhone users say they will never switch to Android. You can say whatever you want about the Apple ecosystem, which absolutely traps customers into iOS devices. However, this ecosystem doesn't appear to be going anywhere anytime soon, and customers will continue to participate without a doubt in my mind. Now, moving on to the reasons why Apple stock is overvalued. Apple's expected earnings per share growth over the next 5 years is 8%, according to Wall Street estimates. This is despite EPS remaining flat over the last 3 years and expected to be down 2.5% the current fiscal year. Despite Apple's slow recent growth, the company is trading at a price-to-earnings ratio of 32.84, approaching its 15-year high price-to-earnings ratio of 35.5. The company's slow growth and their high price-to-earnings ratio is a red flag for me. Non-numerically speaking, Apple has had seemingly such incredible products that they've had a hard time innovating anything other than the iPhone camera. This has obviously changed recently with the announcement of Apple Vision Pro, which I don't believe will see any meaningful sales until they become price comparable with a laptop, and I don't expect that to happen until around 2026. All this being said, Apple Vision Pro is at least taking the right approach of creating a product that people want before they're creating a product people can afford. This is a classic approach from Apple, and I expect it to work out in the long run. Now, the rumors of Vision Pro and the announcement of Vision Pro have been large contributing factors to Apple stock's recent run. This has me a little bit skeptical personally because of one simple word: Meta. Meta Reality Labs invested, or whatever you want to call it, $13.7 billion in 2022 developing Metaverse, which the company seems to be all in on. They continued operating at a loss of $4 billion in the first quarter this year and expect to be increasing losses in the next year to come. My skepticism has not resulted in a completely negative outlook for Apple Vision Pro because Apple Vision Pro, being a pricey product, captures a much different market than Meta does with their Quest. Meta has a goal of connecting people and giving them a platform to express themselves. This results in them optimizing for use cases such as gaming and media. On the other hand, Apple is optimizing for use cases where people are sitting on a couch, at a desk, etc. Creating a product that is more productivity related, other than fun or sociability related, will allow Apple to create, in my opinion, what is a much more sellable product. In addition, companies that are selling apps on Vision Pro are actually going to have to sell them compared to people giving them away for free on the App Store because they will cost more to produce. What this means is that Apple is going to be bringing in more of their juicy services revenue that is very high margin, especially since we know that the people who are going to be buying Vision Pro can afford whatever apps they desire. At the end of the day, the rumors for Apple Vision Pro and the announcement of Apple Vision Pro is not enough to warrant a 30% stock increase, because in the best case scenario for Apple Vision Pro, they do $1.25 million in sales, in my opinion, and that is $5.4 billion in revenue, which is only a small dent in their overall balance sheet. In conclusion, Apple's extremely high price-to-earnings ratio and their near zero growth over the last 2 years, matched with Wall Street estimates of only 8% earnings growth over the next 5 years, is not overcame by their ridiculously strong balance sheet and is why I've recently reduced my position in the company. That being said, Apple is a company that is going absolutely nowhere for the next 10-15 years, which is why I've only reduced my position instead of eliminating it outright to give myself exposure to high growth companies that I believe offer a higher return on investment. Now that's it for this episode of Hot Markets. As always, this is not financial advice. I'm not a financial advisor. But if you learned anything valuable from this episode, please consider subscribing so you can learn more from the next one. Peace!